Sanjiv Bhasin is here to take the discussion forward. Sanjiv, morning. 22,000 is back. We are going into this policy this time around the expectations are higher for a dovish kind of a policy. Look at how mid-cap realty started running. Look at how, insurance was running yesterday along with autos. You're bullish again, or you continue to remain slightly cautious, which was your stance, say, till a week, 10 day back?
So Ajay, we've seen that from the highs, the market did correct. But actually, what I was again reiterating was that some profit booking in the mid caps. But like I said, it's the index which should outperform. With Reliance now, I think we are undermining the power of HDFC making a comeback. If you just read, they've launched 4 new credit cards. They've raised $750 million on bonds. So they are reinforcing their capital and credit is expanding fast. It is the deposit franchise which has been a little bit of a liability. And I think that will pick up over a time. If you were looking for a bargain, then at 2.5 times, HDFC Bank will never come in many years for such a long period. And these periods are generally short-lived. So look and pick. But like I said, I was positive on the index, and I think the index is now headed to new highs. The reason being simple, the feeling of missed out, and the FIs who have been underweight India will have to catch up. Now there's a global rally. You have to go with the sentiment. You rightly pointed out, I have been bullish on insurance for a long time, and we said use this dip, because in this dip there was results from APE and gross net value additions which were lower, but that's on a more of a seasonal effect. I think insurance, brokerage, depository, exchanges are no-brainers. You have to look for the next 20 years, and that is where the money lies. I was surprised by Britannia's results. I think they were much better than expected, even though rural incomes didn't pick up. So, select FMCG will also make a comeback. To sum it up, IT, pharma, and now FMCG and banks are leading. Banks should start to catch up. So 22,500 very much on the cards. RBI policy will be a non-event. I think it will just come and go. The RBI will do nothing till the Fed starts to react more positively on rate cuts, and that is just a matter of time. Whether in March or April, the market is pricing that in.
Okay, fine, fair point. Mr. Bhasin, you started sounding very similar to Modi ji, 20-year view, 30-year view, 40-year view. That's interesting. Okay. But what are your views on Ashok Leyland? Came out with a very good set of numbers, commentary. People are talking about some kind of a asset monetization, value unlocking in Switch. Did you check out the Ashok Leyland numbers?
Ajay ji, thank you for the compliment. But, in spending 35 years, I realized wealth will only be created if you can look long term. And being a patriot and an India bull, there is no question of timing the next 3 days, 3 months, 3 years. The next 30 years only belong to this country. And if you are going to be, one of the top 2 in the world, then look at where your market cap, your sense of participation, your retail flows. Don't take the FI numbers on face value. They are generally the ones who sell low and buy high. It is the retail investor who's raking in the asset class called equities. Financialization of savings takes generations, and that is now what the advent is. Ashok Leyland numbers were superb. They have said they are cautiously bidding for the EV bus, contracts, but they don't want to play a longer term contract with less margins. That is called superior thinking rather than just jumping in. It is a pedigree stock. If there is one stock I can put my money now at 175, it is Ashok Leyland. 250 is coming. By the next 3 months, you will be in money and you will be laughing your way. I think numbers were superb. 3rd largest bus maker in the world. And secondly, it has 53% market share in India. EV market is growing. They are getting into more CV market share from Tata Motor. So thumbs up to Ashok Leyland's numbers. 250 is my target.
Sanjiv, wanted to get in your thoughts then on some of the other key earnings that we had. What's your outlook on VMart's numbers? A 14% growth, margins have been flat. How are you looking at the entire consumption space in light of what even Britannia delivered in line?
So I was impressed by Britannia's numbers, and we know that rural incomes have been impacting, plus there has been an increase in milk prices, shortage. But I thought Britannia numbers were better than expected. They've protected their margins. And I think Britannia will be a very key play now into the next quarter onwards. This is seasonally a weak quarter. I would be more positive on Nestle's results, which will actually beat all expectations. So I think Britannia is a must buy in your portfolio. Look at some of the FMCG plays because they've underperformed the market and for the right reasons on expensive valuation and more, delta in the mid cap basket. But this is the time you must be selective, be a little defensive. Nestle is my top pick, and I think you should add Britannia over there.
All right. Thanks for that. Let's stay with us.
In fact, there's a very important news coming in out there on the ticker, which I wanted to mark. Okay. Bhasin Saab, you're there with us, right?
Yes.
Yeah. So I just wanted to take it up with you only. You've been in the market for such a long time, and your clients have interest in F&O side as well, a large section. We're just getting it on the flashes that ANMI, the broker association, appears to be getting comfortable with the idea of extension of trading hours in phases, and they have given their go ahead for extending trading hours as per NSE's proposal. So they are actually put it on NSE, whatever they think right, whether it has to be done in phases or all at once. What are your thoughts? Does the system, the entire ecosystem have the wherewithal? Because the broker association so far were resisting, saying that the systems don't have the wherewithal to handle longer hours.
Correct. I think the system is not geared up to. There is no work-life balance, Ajay. You cannot do this that you have inordinate hours. In the end, brokers went through the COVID crisis, putting themselves to risk, and all for the sake of obviously money involved, giving a better giving a better feel to the clients and protecting clients, investors' money. Now to keep this inordinate hours just to be in balance, you'll have the same volume, but it will be extended. And it will add to all three. How will settlement takes place? How will you have a back office which will create to that? And thirdly, there will be unfortunate price movements because participation initially will be low. So think of the pros and cons, and please, I have requested. I used to work in Hong Kong for 5 years. Hong Kong had 2 midday breaks for lunch. They said we work to eat, not eat to work. Similarly, in India, there is not even a break for 5 minutes. So at least keep a work-life balance, give a half an hour break. As it is, your volumes will catch up. Keep apathy of what human beings go through. Just by increasing trading hours and showing your headlines that India is 24/7 does not work. You are doing extremely well. The government makes more money from securities transaction tax than from other income. And why are you spoiling the party? I think we've had a brilliant time in this circumstances. I am totally against it.
I must also tell you that just bring it to on the table that this extension of trading hours will be one in phased manner, which means maybe an hour or two extra first, and also only for index futures right now, not the entire cash segment as well. So certain indices maybe may start with the Nifty futures, perhaps Bank Nifty may get added later. So first, it's not happening whole hog. It will be in index futures to start with, and as it is, index futures is a small portion of the overall trading universe. Not every trader actually trades in index. They choose their stock futures as well. So we'll take it with a pinch of salt that it's not going whole hog. It's a proposal which has been made for index futures to start with, and that too in a phased manner. Thank you for joining us, Sanjiv. Have a great day ahead.